2.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Product Development Specialist with Nasdaq Investment Intelligence, to discuss Nvidia's growth story given the outsized impact it has had on the performance of the Nasdaq 100 index. Sanjana, it's great to see you as always. Welcome back to Trade Talks. Give us a quick recap of what's really contributing to this growth story here.
Sure, Jill. So as you mentioned, Nvidia has contributed the most to Nasdaq 100's outperformance last year as well as this year. It has made waves as it has been the biggest beneficiary of the AI boom. And if you look at 2023, it was up by an impressive 240 percentage points versus the Nasdaq 100, which was up 54 percentage points. And if you look at 2024 year to date, it's up 78% versus the Nasdaq 100, up 7%. And if you factor in the headwinds from interest rates and geopolitical concerns, the rally is even more impressive. So we thought it would be worthwhile to dig a little bit deeper into the growth story in our slides here.
So let's do that. Let's start with your first slide here. We know AI is central to its growth. So give us some stats on that. And what are some of the risks to that thesis?
Sure. So we have broken down the growth story of NVIDIA in this slide. I think most people are already familiar with NVIDIA's record-breaking performance in 2023 and 2024. So we are not going to go into that in much detail. But what is less known is that its market cap rose from $1 trillion to $2 trillion in a record 180 trading days. It currently has no sell ratings, which I think speaks to the optimism in the markets. And if you look at 2024, you see that it has set a number of records already. Its market cap has gone up by 800 billion this year, and in February it went up by 277 billion. So I think that really speaks to the tremendous growth story. And if you look at consensus expectations for fiscal year 2025, it gives you a sense for how well positioned the company is to grow. Look at some of the stats here. For fiscal year 2025, revenue is expected to grow by 80% year over year, and earnings is expected to grow by 89% year over year. For the next quarter, revenue is expected to grow by impressive 235 percentage points year over year, and earnings is expected to record an impressive 405 percentage points year over year growth. So that gives you an indication for how optimistic market participants are about the company's growth trajectory. And I think as has been widely discussed, these results have been largely achieved due to generative AI, which speaks to how powerful this new technology has been in driving revenues. And this has been done in an environment where export controls were imposed on chip manufacturers, which I think speaks to the ability of the company to innovate in a very tight regulatory environment. But as you mentioned, this run up in performance is not without risks. Hyperscalers are expected to compete with the company to design their own chips, and demands on AI infrastructure are likely to grow, which might weigh on the company in the long term.
What about the concentration risk as it relates to the overall tech sector rally?
Sure. And we have provided some details in our next slide here. We have commented on what the drivers of the rally are. Has it been broad-based? And as you mentioned, addressed the concentration risks. And what we like to point out is that this rally is quite different from the dot-com boom of the 1990s. And for investors who might be afraid of concentration risk, it's worth noting that there has been high concentration in past rallies, and we are seeing it in several other countries as well today, which should likely allay investor concerns. Over the long term, we expect multiple companies to use AI to create new products and services. So we are going to see several companies benefit. And this rally which started off being fairly narrow, has broadened. And now we are seeing companies, including chip makers, cloud computing providers, software and hardware providers also rally. We have seen a run up in performance for companies such as Dell, Amazon, AMD, several players in the tech spectrum, which gives you a sense for how powerful this rally has been. And quick comment on Nvidia. I mean, it has built a strong competitive moat around AI chips. Its pivot from gaming into other end user industries is really paying off. And if we take a look at the price performance in the next slide here, I I think it'll give you a sense for how powerful this rally has been. I mean, take a look at its outperformance versus its rivals. Nvidia has been up by 534 percentage points since the end of December 2022 till year to date, far outpacing its rivals in the space. And I just remembered this concept I learned back in my college business classes on the first mover advantage. And I think this has been a fantastic live example of a company that has capitalized on the AI boom.
Yeah, well, I mean, so Jen, it's a perfect segue into your next slide as you talk about the significant outperformer versus the other chip makers.
Sure. So in this slide here, we have captured the performance of NVIDIA versus other rival chip makers, including Intel, AMD, and TSMC. And as you can see, it's been up by an impressive 534 percentage points, far outpacing its rivals. It's had a first mover advantage in generative AI and has really been able to capitalize on its on the AI boom. And as I mentioned earlier, growing forward, the projections appear to be optimistic as well, which is likely to bode well for the company.
All right, and as we take a look at your last slide here, let's talk about some of the valuations here. What are the differences in the investment narrative?
Sure. So this slide here is quite interesting. It sums up quite nicely how the investment narrative is differed among the Max 7. I think I'd also like to point out that my colleague Mark was on Trade Talks earlier. He had a very interesting chart that summed up the fundamentals and earnings of the Max 7. And this chart is another attempt to capture the valuation story of the Max 7. We have provided details into the forward PE. So as you can see, NVIDIA became less expensive over the course of the year 2023. Price performance for the company was up 240% in 2023, if you recall, while forward EPS was up almost 4 times due to the boost from generative AI, which explains why it became less expensive over the course of the year. Meta became more expensive, which indicates that the investor sentiment improved as they were encouraged by the efforts made by the company towards cost cutting and also towards monetizing generative AI. But as Mark pointed out earlier, they got more expensive out of trough valuations. So that's worth noting. Amazon was another company that became less expensive. It was up 80% over the year, while its EPS doubled. So it got relatively cheaper. And if you look at the rest of the Max 7, you see that they all got more expensive. Tesla was up a lot in terms of price, while the EPS growth was negative. So you see that its PE expanded over the course of the year. And I think what the slide reflects is that the narrative among the Max 7 companies differs. I mean, we tend to hear all the companies bucketed together, but if you look closely, you see that it's not a homogeneous group.
All right, Sanjana, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.